Good Tuesday morning. Again, Holy Week. Easter is Sunday. We've got a shortened week. Friday, we are closed for Good Friday. We just had an interesting. We were just watching the British reporter here on CNBC, and she wasn't wearing any underwear. She had a nice camel toe this morning. Anyways, distracted by that. Wow. Anyways, the futures are down here 8.16 as we speak. Again, European markets the last few weeks, I've been telling our members, have been driving the markets, and most of the moves have been happening in the Euro markets. We have sold off from midnight Pacific here of high of 832.33 down here to 816, and once again the bulk of the move is happening overnight, and we made some recommendations to our members to that sentiment that yesterday's pivot of 842 held, and yesterday's rally into the close was really a gift to get short if you chose to hold it overnight. So that has worked out nicely. If you played some calls and you sold those are going to continue to pay you. Again, we've been saying for a few days that 803 area is the 61.8 retrace line from the last 10-day low to the recent high of 848. So that 775 area up to 808 gets you, or 848 gets you a 803 area. So to me, it looks like we're going to go to that 803. It's also the S2 today is about 804. I'm looking for that level, which is another 12 points down from 816. I would be a seller of all rallies. Up to the pivot today is 832. So I would continue to be a seller. The market has shifted back to the dark side. Again, I said this on Friday. Nothing has changed. We've been selling the 850 to 880 calls, and right now it looks like the premium is going our way, which is to zero as we approach those levels. I don't think we're going to be screaming over 880 for sure at this point. So to me, that's a pretty low risk, safe entry premium short right now as the market continues to chop around. You've got to day trading wise, it's been a lot of V moves, V up, V down, V up, V down. At the end of the day, the last 3 days we are tipping back downward. We didn't make a new high yesterday. We made a new low. Today we've already made a new low, lower than yesterday. Now that we're below that 818, and we traded down to 813. So right now the trend is down. Don't let anybody tell you differently. We have been up 660 to 850. For God's sake, we need a break, and you can't go straight up. 30% is a year's worth of work, and we've done that in 3 weeks. Not what you want to see in a bull market. You want to see a bull market go up 0.5% every day. That's what happens in real bull markets, like we had 03 through 06, which was a bull within the larger context of a bear. So, but that's what you will see. You won't see these big 30% moves in 3 weeks. It's just not a healthy market. You're just working over very oversold conditions that we had, and again, bouncing back to resistance levels that are in place and will be in place for a long while. We've got a lot of resistance overhead. For us to go above 880 is going to take a lot of work. From there we go to 940, from there we go to 1000, from there we go to 1060, from there we go to 1120. So we've got 5 different layers, all would portend still bigger picture bearish charts. In the meantime, trade them. There's no sense in getting married to positions, long, short. Play both sides of the market. This is a trader's market. Will not go straight up, will not go straight down, and take advantage of those opportunities. Peace, have a good day trading, and let's look for the low 800s today.